Let's talk about mortgage lenders and their standard variable rates, those follow-on rates. You know, those rates that your mortgage fixed terms run out and they're writing to you and say you're now going to go on this rate if you don't, take a new product. It's Pam here from Niche Advice. Hope you're well. Right, so let's have a look at some of these high street, mainstream, and residential and buy-to-let standard variable rates, and then we'll talk about them. Okay, so here's the chart. I'll put it up on the screen. So lender, Barclays, 8.74, follow-on standard variable rate. HSBC, 6.99. Fantastic, really. That's not bad from HSBC. Comparing to Halifax, 8.74, NatWest, 8.24, Nationwide 7.99 and Santander 750. So the difference between the lowest is 6.99 and the highest is Barclays at 8.74. Now that's a big difference. Now granted, lenders are, hopefully not many people, but we know there are a lot of people still on standard variable rates. But really, if you are watching my channel, you should know by now that when your rate comes up to renewal, you can contact an independent mortgage broker. Don't just take what you've been given by them. Let the independent mortgage broker research what's available and see what's best suited for you and compare it. Guys, look at it. These lenders, if you don't do something about it, they're going to put you on that rate. If you're on holiday and you miss that letter, yes, they are proactively writing to you and saying, look, your rate's going to run out and you can choose. But a lot of people are ignoring those letters, and a lot of people are on standard verbal rates, unfortunately. So get better education. If you've got family members, maybe elderly family members, people that are not in their finances, they don't keep on top of things, you speak to them about it. Find out which lender they're with. Give them some guidance. Try to find out what rate they're on and when the fixed rate's coming up. Because these are the rates, and these are mainstream high street, the big banks. That's what they've got. So some people are jumping from a 1% rate to a 8.74% rate if they don't do something about it. Let's look at the buy-to-let sector. Now, on the buy-to-let stuff, you've got BM Solutions. So I've looked at some of the mainstream buy-to-let lenders, some of the big guys, and some of the smaller specialist guys. BM Solutions, 9.59. Foundation Home Loans, a specialist lender, 10.24. So we've hit the 10 barrier. We've broken it. Godiva, 7.49. Now, Godiva are a buy-to-let arm of Coventry Building Society. Paragon, a big specialist lender, 8.35. Precise Mortgages, 8.50. So, and the Mortgage Works, one of another big lenders, they've got actually two. They've got 8.49 up to 65% loan to value and 8.99 above 65% loan to value. So again, guys, now some of these lenders may not actually offer a product transfer. I think they all do, to be fair. But, if your rate is coming up to an end, you need to be contacting independent brokers, contact the lender itself if they can deal with you directly. I know certainly someone like a Precise and BM Solutions, those two lenders don't. You have to deal with a broker. They may show their rates, but you've got to actually get a broker to recommend you the product. I'm not sure if that's the case even with Foundation. But yeah, so that gives you an idea. And these rates were actually live as of the 12th of the 2nd, 2024. So yesterday. And I've put all the disclaimer bits and pieces there. This is not advice. I'm not telling you to go to this lender. Now, I'll tell you how. I'll give an example. I recommended a mortgage product for one of my friends, funny enough, yesterday. Now, both lenders, and I could actually tell you what the lenders were, funny enough, because they're both here. So they had a 3.99 rate, both of them. It was HSBC and Santander. The products were identical. Free valuation, 3.99 rate, 5-year fixed. Okay, free valuation, free legal. Nothing else different. So there's two things we would look at and things. What I looked at, what the follow-on rate would be. God forbid if something happens and they may not be able to get a new product transfer. The world changes. Why would I recommend one over the other? Well, I looked at that one and I said, well, actually, the HSBC one is 6.99 and the Santander one was 7.50. Okay. And then I looked at their service standards. Now, this was a remortgage. Okay, so service wasn't a huge factor because they could sit it out. Okay, if it was a purchase, maybe we would look at that. But again, I looked at the service to see what the timelines are from application to offer, for example, or application to completion, or offer to completion. So we looked at those when they were identical. I then also looked at their criteria around, one of them was a self-employed, the applicant, the other one was an employed. I wanted to see what they will treat in regards to the self-employment. What do they use? Because they're actually different the way they work. So both of them said it was affordable, but I'll give you an example, okay? Santander can work off salary and dividends only, okay? And if you're sole trader, only net profits, okay? HSBC can work off salary and net profits, okay? So slightly different way of they work, how they look at the income. So if the income is 100K, they look at it differently, okay? And that will have a bearing on the chances of us getting that loan amount, how they work that out. Now, one of them may give you 5.5 times income in theory. Well, I'm not talking about these specifics. Well, I'm just saying a lender may come out and say, we'll go up to 5 times your income. And the other lender may say, we'll only lend 4.5 times your income. That's not the end of it, because how and what element and how they treat that income is fundamentally different, okay? And there is a difference between using salary and dividends, which is essentially the director has to pay themselves, pay dividends tax, and then use that income, or the lender will use the profits that's within the company, which means the director doesn't actually have to withdraw that and pay the dividends income. So there's a big difference with that, and that's not necessarily just to do with the rate or whether it's got a valuation. Or whether it's got a lending fee of a £999 or £899, because the bigger picture needs to be looked into. What is the process? How much tax do they have to do? And now, I'm not a tax advisor, but we can put that and have that discussion with the broker. Anyway, guys, so don't take it as gospel. Don't, when they write to you, don't just take the best offer because it looks like a best offer, but do something about it, because these rates are very, very real, and thousands of people are coming off their very, very competitive rates and are going on those. Someone's making money here, guys. Somebody is making a lot of money out of these people. Anyway, let me know what you guys think about these rates. Let me know if you've got any questions that you want me to answer on my next video, and I'll catch you on the next one. Take care. The content of this video does not constitute giving advice. It's purely for information purposes. All cases should be discussed with a professional mortgage broker. As a mortgage is secured against your home or property, it could be repossessed if you do not keep up mortgage payments. Niche advice is authorized and regulated by the Financial Conduct Authority.